Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darksey here to bring you the daily recap. This morning I said it could be a quiet day in the markets. We had quiet overnight session in world markets. Futures were only up a few handles this morning, had all the makings of a snoozer, and that is exactly what we got. You walked out on the trading floor even as soon as lunchtime today, and it was a ghost town. So I think a lot of people recognize that there wasn't a whole lot going on. We're in a little bit of a tricky spot in the market right now. We are to the point where we've sold off a little bit over this week, but we're not at a point where we're oversold enough that people are really excited about buying. But then again, nobody really wants to sit short this 2013 market. So I think there's a little bit of indecisiveness now. Maybe the result of the fact that we have that big Fed meeting next week, that every Fed meeting gets hyped up. I don't know if it's a result of the media hyping all this stuff up and making a big deal out of headlines, but it seems like every Fed meeting is the Fed meeting that's supposed to be the most important Fed meeting of all time, and suddenly now December is that one that everyone's talking about. Some people think there's going to be a taper. Some people don't think there's going to be a taper. I'm in team no taper. I don't think they're going to taper in December, but that's really just guessing. We'll just obey the price action like we always do, but today, like I said, sort of a forgettable day in the market. Not a whole lot of movement either way, and next week perhaps things could liven up a little bit, but I think it could be choppy into that Fed meeting. But we take a look at the chart of the spiders. You can see it for yourself. You don't have to take my word for it. We had that sell-off on Wednesday that sort of shook things up a little bit. Some of the harshest selling that we've seen since early October, but still in the context of where we've came from, not a big deal at all. Just barely breached some intermediate term support levels. We are below the 8 and 21-day moving average. Maybe could test the 50-day, but nothing too extreme. You can see the candlestick today, and you can see the volume below. A very insignificant candlestick. We closed down, I think, 0.02%. So for all intents and purposes, we finished flat. Very similar to what we saw in a lot of overseas markets, just very quiet action with very little news driving the tape. But while it was all quiet on the market front, we did see social media continue to just absolutely confound people and continue higher. We'll just jump right into the charts. And you got to start with Twitter. I love Twitter as a software, as a platform, as a social medium, but I don't love the valuation of Twitter right now. Obviously, the company doesn't make any money, and it's valued at over $25 billion, so that's a little bit hard to fathom there. And not only do they not make any money, the revenues, it's hard to get to a valuation like that with the amount of revenues that Twitter generates, but it seems to be something that was a little bit orchestrated here in Twitter. And, you know, everybody followed the IPO. It came out, opened sharply higher when it opened for trading, and then just sort of was lethargic from there. And every analyst that seemed to come out on it gave a bearish price target. You saw targets in the 30s. You saw targets in the 20s. You saw a lot of people that weren't terribly enthusiastic about Twitter. And then all of a sudden, you get a big price and volume ramp that makes it seem almost like they were trying to keep enthusiasm down here, talk it down a little bit to get a better opportunity to buy. Because you don't get this type of price increase without big institutional buying. This is not your mom and dad sitting here, oh, I'm going to buy some Twitter and I'm going to drive it up 20 points, 50% over the course of 2 weeks. That's not what you're seeing. You're seeing institutions accumulate this. And the reason why it's going up, I talked about it this morning, the reason why Facebook's IPO was so unsuccessful and why it was bogged down for so long is that supply, the float was too big on the Facebook IPO. And with Twitter, they went the opposite direction. They came out with a high valuation is what it ended up opening for trading at, but the float remains very small. So when you have low supply, it's going to lead to an increase in price when there's demand there. And that's what we're seeing in Twitter. They didn't try to squeeze every penny out of the IPO that they could by making it a really large float. And I think maybe they did some research and some homework on that and figured maybe down the road they can do a secondary offering or in other ways they can recapitalize themselves and things like that without making the initial float so large like they did with Facebook. And so far, based on this big 50% move we've seen in the past 2 weeks, it looks like a stroke of genius from Twitter, and it looks like demand is going to keep being rampant for that Twitter stock. But again, like I talked about this morning, even though it did go up another 4 or 5% today, I don't know what the final percentage gain was. Really hard to buy up here. Yes, could it go higher? Maybe. But all in all, a prudent trader does not buy after 2 really big weeks like we've seen in Twitter. And then Facebook, not to be overshadowed, even though it's getting overshadowed by Twitter. 2 huge days after it was announced that Facebook would be added to the S&P 500 and the S&P 100. So what we saw was on Tuesday, you got a big breakout bar out of this bull flag that we'd highlighted on off the charts. But then the next day, you frustrated a lot of traders that were looking for some follow-through by erasing a lot of those gains and making it a little bit of a muddled technical picture for Facebook. But then that news came out. Some people had been talking about the potential for Facebook to get added to the S&P a couple weeks ago. It got overlooked for another stock, so I think people sort of took it off their radar in that respect. But then that news came and triggered gap and go to the upside and follow through today. Looks like it has its sights set on highs with, Twitter surging the way it has been trading over the past 2 weeks. I think Facebook doesn't want to get left out in the cold, so I think in general, social media that's performing well on mobile, which Facebook now is, and Twitter is native to mobile and very strong in that regard. I think there's going to be continued demand from institutions for those stocks, and I don't think this run is over for either one of those stocks. Both could use maybe a rest or a short-term pullback to allow the 8-day moving average to play catch-up, perhaps. But overall, I think going to be a continued destination for hot money through the end of the year and into 2014. A couple other names. Tesla is one I talked about this morning, is one that I like to set up a lot, talking about a quiet market today potentially, but Tesla with a big 30% short interest is one that is ripe for another potential short squeeze. Let's take a look at the chart. On a low volume day like today, it's very common to see a lack of commitment from stocks, to see topping tails or see a lot of tails in general, and that's what we saw in Tesla. Initially, it looked like it wanted to squeeze, and it was squeezing early in the session. It came back up, and I believe it's 50-day or 100-day, but tailed off, finished with just very minor gains for the day. But shows you, I think, that Tesla does want to go higher. I think the market was very lethargic today. Volume was light. Very hard for a stock to really break out and show a ton of commitment in that type of environment. But Tesla's one that I think all the worst of the headlines, I think, are behind them. All the stuff with the battery fires and all that. That German probe came out and basically absolved them of any wrongdoing that could lead to a recall of the vehicles. So it's something I think opinion got so negative on Tesla at around the 120 area that now I think it definitely has room to squeeze the remaining shorts, and there are plenty of them with a 30% short float. Another thing to take note of that I talked about this morning, Coors. It's hard to really get a grip on what's going on with Coors right now. I think it's just a very thin, relatively new issue within the past couple of years. When did it IPO? We can take a look at the monthly chart. Coors IPO'd back in January of 2012, so still a very recent IPO. But you take a look at the daily chart, like I said, very hard to get much of a read on what's going on. We listed it early this week, Monday or Tuesday, after, I believe, this bar that looked like it was going to take it above this upper level downtrend. Then it got rejected, traded back down into the 21-day. I think people lost sight of it a little bit. And then on Thursday, big igniting bar to engulf those 2 days of price action. So our opinion's back to, all right, Coors looks like it's prepared for a breakout, looking good. Today we get upside follow-through in the morning. Really impressive action, nice momentum. People are thinking, all right, quiet market, but Coors, this guy Darcy actually knows what he's talking about. But then we get a reversal back into the 8-day. And then finally, to close off the roller coaster for the day, we close off the lows a little bit. A small bodied candlestick with a wide range just tells you that the stock is very indecisive right now. And it's still on our radar as a potential breakout candidate, but definitely a little bit choppy to say the least. But worth keeping an eye on, I guess. Maybe just take a short-term tactical approach with it. And then an interesting thing today is while we've seen social media stocks and some stocks like Tesla get some renewed interest, we've seen high beta tech stocks, big name high beta tech stocks, weaken a little bit. Nothing too concerning, but just under the surface a little bit. You're seeing a couple of these stocks retreat a little bit. And today was really the first significant down day for Apple. Let me pull up the chart. It had a really nice move out of this pattern we highlighted again on off the charts. I'll draw the line from the pattern that we talked about in that newsletter. Right here. We talked about this triangle. Really nice momentum out of there. It met our target within 4 or 5 days, I believe. But then on this day when it opened higher and then traded back lower, it wasn't a huge engulfing bar or anything like that. Just a little bit of a topping tail, topping type of action. And then we got a little bit, I guess you could say, it's sort of like the setup we talked about in Amazon where it came down 2 days and then traded sideways. And then once it broke downward out of that, I guess you could call it a little bit of a bear flag. I got some acceleration to the downside today. Now it's below the 8-day moving average. I think it could test the 21-day. It's had a big run. I think under the radar, people don't realize how far Apple has come from the bottom that was put in back in April. it's up around 40% since then, so nothing to sneeze at all. And I think could use a little bit of a rest after that resurgence. Maybe all that iPad news is out and sort of old news now, and the iPhone I think is doing all right. The China mobile news is out. People sort of digested it a little bit. Apple needs maybe another new catalyst, like some better than expected holiday sales or more buzz about a watch or a TV or something to help ignite it higher. But it looks like this group is headed for a rest, and Google is also in that group. Again, nothing too concerning here, but you're seeing these stocks that have held their 8-day moving averages largely for the past several weeks, last 2 months since early October. Seeing them weaken a little bit, break below the 8-day moving average after 3 methodical days down. Maybe they just test the 21-day, but it's not where money is rotating right now, so just something to take note of. And then Netflix, a little bit weak today. Tried to break out yesterday, but again, it's sort of like Coors, where it looked yesterday like it was headed for some continuation to the upside after breaking a pivot here, but then today opened higher but failed and traded back down into the middle of yesterday's candlestick. So just another one that maybe looks like it needs a little bit more time. But overall, like I said, very quiet day, very few stocks, specific stuff to even take note of. There was some small cap action that some people in the VTF were focusing on, and there was volatility in very few pockets of the market. But overall, I think days like this are ones that most veteran traders will tell you that they get out of the office early, sit on their hands a little bit, and wait for things to have a little bit more clarity and a little bit more tradable volatility. But we'll see you back here on Monday morning for the morning call. This has been John Darcy for your daily recap. Everyone have a good weekend.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.